American Ron William. He's a technical strategist at MIG Bank. He joins us now. Ron, great to have you on the program. So you were here on the show last year. You said this would be one of the biggest trades of 2012, the dollar surging against the yen. That has been the case, but you say this pullback is in sight. Tell us more.
Well, happy greetings from Zurich, Lindsay. Yes, as you said, we had this discussion recently, and the dollar-yen 40-year cycle has awoken, and that's why we've seen a 10% rise in dollar-yen, so US dollar strength, Japanese yen weakness, in just 7 weeks. And so just by that in itself, it is going to be one of the biggest trades for 2012. It already has proven that. But of course, it has moved too fast too soon. And is technically overbought, and that's the DeMark exhaustion signal there, the red number 13, which signals a potential pullback over the next few days and weeks, potentially to the 82 level and maybe the psychological 80 level, but thereafter the upside trigger level is going to be that 85.50 that you can just see at the top side of the chart there.
So, Ron, we're actually just showing your chart here, 10% rise in 7 weeks. So you say it's poised for a pullback, but the cycle, the general cycle, is going to continue. In fact, talk to us about these key resistance levels. You say 94 yen. When it hits that, that's going to be a big marker.
That's going to be a big marker, and I mean, short term, we might have a healthy pullback because the markets move so fast, so soon. But it's important to keep an eye on the long-term picture. Remember, it's a long-term 40-year cycle. These are very rare events. You can see there on the chart, there's once we get a resumption of that breakout from this pattern that you can see there over the last few years, the target is into the key level at 94. So that is definitely further upside scope to go. And an interesting proxy that I think traders and investors should keep an eye on is the options market. And you can just see there on the bottom axis, just showing you the difference between puts and calls, so people are buying and selling options. And it just shows that there's a lot more room for call options in the market. So there's still a lot more upside potential on dollar yen.
Let's bring up your third chart here, because this kind of points to the implications for the way that the yen is traded, for the way it's seen by investors.
Well, absolutely. I mean, this is a Japanese yen story. So broadly, in broad terms, Japanese yen is going to weaken across a number of currencies. And what this symbolizes is a significant change in mass psychology and a change in capital flows, how the Japanese yen is traded, both in terms of safe haven flows, but also in terms of the popular carry trade, which has pushed the yen to its record kind of highs of last year, which was hurting a lot of exporters out there in Japan. That will change, and the chart that we're looking at here is a trade-weighted index of Japanese currency, and it just shows that it has broken, I should say, an important 5-year trend. So that is a technical signal that we will see further Japanese yen weakness, and of course that will be good for Japan over the next few months.
Indeed, it will, especially for those exporters. Now, before you go, Ron, I want to ask you about gold, because you say the technical charts show you that there's significant downside risk, and this is contrary to what most of the strategists that come on our program are telling us.
Well, and this is the great thing about market timing. We follow the trends and the momentum in the market, but then we always keep an eye when those trends may have reached an exhaustion area, where maybe too many people in the market have been buying, and gold has been governed by that rule. Like every other market, it moved very fast into that $2,000 mark, and we've had a kind of a corrective stage, neutral stage. The key thing on gold is just a few weeks ago we saw a $103 drop in just one day. And to me, and I think to most investors and traders, that was a warning shot that there is still some short-term downside risk on the yellow metal, and that is likely to target 1522 on the downside, the level there which I've highlighted. If we get a weekly confirmation below 1522, then as we discussed in previous interviews, Lindsay, that should then open up further downside risk into 1460 and 1300. And the key message here is these are buying opportunities for a resumption of the long-term uptrend. And I see that happening from a cycle perspective during the summer months of this year. So this would be a tactical buying opportunity.
Buying opportunities for the long-term uptrend. Ron Williams.